What I'm really going to be talking about is what does Bitcoin's death look like, right? Um, and this isn't a doomsday scenario of, oh, Bitcoin's going to go to zero, Bitcoin's useless, right? Because historically, anyone who's ever criticized Bitcoin is usually a fiat maxi, like Dave Ramsey. They don't know anything about Bitcoin. They've been in traditional finance their whole lives, and they throw blank statements around saying, "Oh, Bitcoin's going to go to zero," and they have no explanation as to why. They call it a pet rock. They call it, you know what I mean? There's this. I guess what I'm trying to say is there are people who don't even know what they're talking about, and then they say Bitcoin is going to die. That is not what this space or video is about. This is going to be perfectly explaining. I'm someone who understands Bitcoin, I would say, pretty damn well, and this is how I think it's going to die. And my definition of die also isn't going to zero. It's simply more of just something that I don't trust or that I would no longer want to use, right? Because I would argue the US dollar is not dead. It's just something I no longer trust and it's something I no longer want to use. You still need dollars to, go about society, right? But I'm sure as hell not going to use it as much as I can, and I don't trust that shit, right? Well, that's what's happened with Bitcoin. So, a few things. I just see some people joining. Hello, hello. Um, I'm getting distracted too because I'm playing on my Xbox and I'm crashing in my car right now. But, so I'm going to talk about what does Bitcoin's death look like, and I want to talk about a few more things. But yeah, I'll get into that later. So, I've already done a spaces on explaining that Bitcoin needs to hit 19% a year to grow or to have miners not drop off the network. Like so to keep Bitcoin from dying, it needs to rise 19% a year in price, and that's simply because there's no fee market, right? If there was a fee market, we wouldn't have to worry about this. So, um, what does this look like? And I've already talked about how, the higher the market cap, the harder and harder it is for Bitcoin to actually maintain this 19% hurdle rate. And here's what I realized. The value proposition of Bitcoin is really what it's turned into has nothing to do with the white paper. It has everything to do with the world of fiat, the US dollar. Everyone talks like in the fiat maxi world who have become Bitcoiners, they all talk about how fiat steals your wealth 10% a year, and they talk about, oh, that raise you get that's 10% at your job. That's not a real raise. That's just keeping up with inflation. And that's true, right? If you get a raise for 10%, congratulations. You just kept up with rent. You just you're not being rewarded for your actual labor. Your labor is not producing more with the raise than it did last year, right? And worst case scenario, not only did you not keep up with inflation, you might even be pushed in a different tax bracket. We're not even going to get into that. Tax brackets don't even keep up. Um, don't know if that's a coincidence or not, but that's a different debate. Um, anyway, um, as if they're not taking all your money to begin with, right? They take your taxes and they push you in different tax brackets. But anyway, I'm going on a tangent. But um, so we know that we know that fiat. Everyone dislikes the idea of 10% a year. That's very stressful. The stress of having to make another 10% a year in income, it's a lot of stress. Um, and what's really fascinating is all these fiat maxis, they leave fiat and then they go to Bitcoin and they think that they're free. They think that they've escaped. They think that they found Valhalla. They just got to buy this new. They're operating on this new ledger. This new ledger doesn't have that weight of 10%, being like you don't have to make an extra 10%, and your wealth is stored. And you know what's fascinating is that fiat degrades your wealth by 10% a year, whereas Bitcoin, it actually does. You do get wealthier on Bitcoin because it's a inflation hedge. It's a real fixed ledger, so that's very valuable. But what they don't understand is that fiat, you have to get your income to raise 10% a year, but Bitcoin as a network has to rise 19% a year. And so effectively, you're leaving one ledger that the government needs to raise fiat. They need to increase the money supply by almost roughly 10% a year to keep things running. And you're trading it for a ledger that needs to rise 19% a year to keep things running. And the mechanics of how people get screwed look different, but both ledgers have the same problem. Bitcoin or the fiat ledger, right? If things don't rise 10% a year, we start seeing problems. But when they do rise 10% a year, it allows for, I guess, society to continue at the expense of people that hold the currency, right? So you get screwed, but it allows for everything to keep going. So when there's a ledger that needs to rise like that, there's a cost. And there's also a benefit in a way, like society gets to keep running, but it's like we're already taxed. Why are we adding another 10%? It just shows that it's an inefficient ledger. And so what's so fascinating is that Bitcoiners leave that ledger and then they go to Bitcoin and they think that they're free. And right now, no one's really seeing the issue. But guess what? They're operating on a ledger that needs to rise 19% a year. So the issue is actually even worse on Bitcoin, but the symptoms are different. So people have the illusion of getting wealthier on Bitcoin, but I would argue it's like kicking the can down the road. Yes, it's an inflation hedge, but it has to be an inflation hedge or it dies at 19%. So if Bitcoin's a perfect inflation hedge, let's just say inflation's 10% a year, and Bitcoin rises 10% a year, well, that means Bitcoin's a perfect inflation hedge. But guess what? The network will die. That's the risk. That's insanity, right? And that's because if too much time passes and the price stays the same, miners will drop off at each halving. And the bigger this thing gets, the more market cap Bitcoin has. It's just a law of large numbers, right? How much can something double before it can no longer double? And this is the price that has to be paid when there's no fee market. So, anyway, I've already done a spaces kind of explaining why this is bad for Bitcoin, but this space I'm really just going to be rambling about what does it look like? What do I believe Bitcoin looks like in 8 years, right? I'm just imagining that I have a friend who wants to get into Bitcoin, and this space is what I'm going to do is paint them a picture of what I believe Bitcoin's going to look like in 8 years or 12 years, right? Mm. So that's what I'm doing here. Okay. So what I believe is going to happen, I believe that in the short term, by the way, I don't have a crystal ball. I'm literally just talking out of my ass because this is just the data I have and just the way I see things. This is how I'm operating my life this week, at least. And so the way I see things is that I believe that fiat is still crumbling and that Bitcoin still has value to the current market, to those who are uneducated, which is the vast majority of people. Bitcoin will serve as a temporary tool and it will probably keep going up in value while it can, and it will act as a good inflation hedge because fiat is still going to have issues around and people are going to want to escape that and people are going to go towards trusted infrastructure, and right now Bitcoin is very trusted, and so that's really the big transition right now. um and my thesis is that Bitcoin will be viewed as trusted infrastructure probably for the next 3 years, 4 years, 5 years, and Bitcoin will have no problems until it's no longer viewed as trusted infrastructure. And my logic for this is that, well, look what happened to Bitcoin when it wasn't viewed as trusted infrastructure. No one cared about it. It was worth nothing, right? It wasn't worth something until people trusted the infrastructure of Bitcoin more than fiat. And so, in the same way, when people stopped trusting the infrastructure of the dollar, they stopped trusting one infrastructure and they substituted it with Bitcoin, right? They now look at Bitcoin as more trustworthy. I believe that the exact same thing is going to happen again. People are going to not trust Bitcoin and they're going to find something else. Now, I'm not here to shill Caspa, but that, I mean, that's just the way the numbers are, right? But anyway, so that's my belief. And so basically what I believe is going to happen, so what does it look like when Bitcoin's no longer a trusted infrastructure, right? Um, how does that happen, and how can we, what data do we have to kind of to view that, right? Well, the way I see it is right now, Bitcoin is trusted infrastructure because security keeps rising. Security, miners keep getting paid, and Bitcoin's price keeps doubling. And so, because there's no fee market and there's never been a fee market, that's the only thing keeping this thing as trusted infrastructure. And so, my belief is that as fiat continues to explode, Bitcoin will keep rising. And I believe that there's going to be a certain point where Bitcoin is only growing at 15% a year. And that's pretty good. Bitcoiners are going to be happy. They're going to be outperforming the stock market. And then it's going to grow 14% a year, right? Because it's now an $8 trillion asset and only so much capital is going into it. And then it's only going to grow at 13% a year. And then 11% a year, right? And I don't know how many years this is going to take. I don't have a crystal ball. But the growth will slow down, and this can be proven because Bitcoin's growth has only ever slowed down. It used to grow at 500% a year. Then it grew at 200% a year. And then it started to grow at 100% a year. And now we're getting up, if you look at the past X amount of years, it's about 50% a year. Now, if you throw in this past year of Bitcoin's price performance, the number's probably a little bit lower. And that's not bad, but it's just like, okay, this is a sign of a maturing asset. But that's the problem, is because remember, this is an asset that needs to rise 19% a year or it dies. So we don't want this thing to mature too much, and that's the risk. And so anyway, my belief is that a lot of Bitcoiners, they trust Bitcoin because they believe that the security budget. If you ever ask a Bitcoiner, like, oh, or actually, I know I used to do this when I was in Bitcoin. I used to ask, what happens when the last Bitcoin is mined, right? You may have watched videos on that, or you may have seen videos. What happens when the last Bitcoin's mined in the year 2100? And in that year, Bitcoiners' response is, oh, well, we'll worry about that in 100 years. Because the last Bitcoin takes 100 years to mine. So mathematically, Bitcoiners acknowledge that there is a problem with Bitcoin. It doesn't matter, though, because it'll be addressed in 100 years. However, that's the protocol's deadline. That doesn't actually mean symptoms won't show up in 100 years. Here's my bet. I believe that symptoms of the security budget issue for Bitcoin is actually, realistically, if nobody notices, probably 20 years out, like very bullish, if Bitcoin really is adopted and pushed, and like truly like Bitcoin explodes in price, at some point it can't double anymore. So even if that means it's $20 trillion, right? So my belief is that maximum 20 years, maximum 20 years. Okay, well, Bitcoiners are going to have to face this issue now. They thought they had 100 years, but they've got to face it in 20. However, I don't think that's even going to happen. I think what's going to happen is there's going to be people within the next few years, the next 4 to 5 years, who start running the numbers and they start doing the math. And in 5 years, I think people are going to run the same way all of us Caspa people, we're all Bitcoiners who just ran the numbers. That's it. And for one reason or another, for some reason, we're all in Caspa because we run those numbers eventually at some point. Or we avoid Bitcoin because we've run the numbers. And so the only thing I think keeping Bitcoin afloat is the fact that just people do not know about these numbers. And so I believe that if Bitcoin has 20 years, I believe that there's going to be a group of Bitcoiners that start to run the numbers in 5 years. And they're going to be like, uh-oh. They're going to be scared. They're going to be like, okay, well, Bitcoin's got, 15 years left. I need to de-risk. I'm out of this thing. I don't have an answer. And in a weird way, I believe a few years might go by where only miners drop off because there's been enough halvings where they're not getting paid anymore. And I guess what I'm trying to articulate is as soon as the market either runs the numbers or the market realizes that a halving has occurred and security has only gone down, that's what's going to force people to run the numbers, right? If Bitcoin is 300,000 a coin, and then there's a halving, and then everyone sees hash rate drops, they're not really going to care the first time because they're going to be like, oh, hash rate always drops. This is normal, right? It always comes back next halving. My belief is that the next halving after that, when Bitcoin is still $300,000 and there's another halving, they're going to be like, oh shit, it's been 2 halvings in a row and hash rate hasn't climbed. They're going to run the numbers. Every Bitcoiner is going to be running those fucking numbers. And what I believe is going to happen is Bitcoin is going to prematurely die, and not die as in go to zero, but I envision a reverse, or not even a reverse, but more of literally just a bank run, right? A bank run happens not so much because the bank actually doesn't have the money. A bank run happens mainly out of the fear that the bank doesn't have the money. So fear alone is a huge economic driving factor. I mean, look at how much money goes into different types of insurance. You can make a lot of money off fear if you can provide insurance for those situations. Um, Regarding Bitcoin, when fiat collapses, right? Um, look at how much money went into Bitcoin just simply out of fear of fiat. There's a lot of money that moves with fear in and out of stuff. And so the same way that Bitcoin's driving factor was fear, I believe just as quickly, as soon as Bitcoiners have 2 halvings in a row where they've only seen hash rate go down, um, they're going to be scared. They're going to have fear. They're now going to have 2 data points that show this thing's not sustainable. There is no life left in this thing. Even though, in a weird way, I'm going to defend Bitcoin here, it technically and mathematically is capable to keep running for the next 20 years. It should be fine. It just gets smaller and smaller. So even though technically Bitcoin's way stronger than people think, that fear alone, it's that uncertainty, they're going to see 2 halvings in a row where miners have only dropped off and hash rate's gone down. It's basically going to be a bank run. People are going to be like, well, I don't know if this thing's going to be here next halving. And what if other people don't think it's going to be here? Let me sell some Bitcoin just to stay safe, right? This is literally a bank run. This is the same psychology of a bank run. It's gonna happen on Bitcoin. The same way that the first types of banks in America eventually had bank runs. It's not a shock to me that the first type of sound money protocol, proof of work, is gonna experience a bank run. I don't know. It just makes perfect sense to me. Um, so I don't know. I could be wrong, but that's just the way I see it. Um, and I have a few assumptions here. I'm going under the assumption that Bitcoin continues the same trend it's had for 15 years of having a non-existent fee market. And I'm also going under the assumption that the same way we've seen all this corporate adoption with BlackRock, MicroStrategy, Metaplanet, all these corporations using genius financial tactics to acquire more Bitcoin. Unfortunately, none of them are self-custodying it, and none of them are using the base layer. They're all having Coinbase or other custody services custody the Bitcoin, and they're all doing over-the-counter trades, essentially trading paper IOUs for ownership on someone else's private key multi-sig setup. So that data point is what I'm going off of right now, because none of them are taking up block space. And so this would be a very different story. I would actually be proven wrong if every one of these public companies decided to start using the base layer. My thesis falls apart because now they're entering the economy of Bitcoin. Now they're bidding against us. Now they're bidding against each other. There's real money fighting for block space. But I don't see that happening. In fact, I wish that would happen. But then there's the other side effects of that actually forces everybody to use the Lightning Network. Anyway, every situation for Bitcoin looks like a fucking dumpster fire. And the data I have right now that I'm looking at is okay, well, no one's using the base layer. And then these big banks aren't even using the base layer. They're just custodying it in Coinbase. So there's really no chance of a fee market generating because it's been 15 years and it's 100%. This asset is 100% dependent on its price going up 19% a year. Okay, well, what happens when other ledgers needs to have the asset go up a percentage a year or the infrastructure dies? Well, we know what happens with fiat. Fiat needs to go up 10% a year. Okay, well, Bitcoin needs to go up 19% a year. So what are we doing here? Like, nothing's changed. We literally are just like, the problems are the same. We just swapped the infrastructure. Like, it's so odd. Um, and you know what's even crazier is more and more Bitcoin is looking like a rough draft. And if you even think about it, how is it that a rough draft is valued at $2 trillion? Can you even imagine what the final draft is going to be worth? Cough, cough, Caspa, Caspa. I mean, come on. Like, and the main difference between Bitcoin and Caspa is one has a plan to have a fee market. That's it. So me personally, I believe that as Bitcoin, the way I think it's going to die plays out. By the way, I don't think Bitcoin's going to go to zero. I just think it's going to be repriced to what it's worth. And so what do I think Bitcoin's worth? Well, it's a ledger that only allows for 800,000 transactions, and anything beyond that a day. Anything beyond that, it takes 10 minutes. And so I believe anything beyond that, I don't know, whatever the hell that's worth, right? I think it's overpriced right now. But it's trusted because it has the most hash rate. But as soon as that hash rate goes, it's fucked. So that's my analysis. I could be totally wrong. But yeah, Caspa I think is the way to go.